Americans put more on credit cards as inflation boosts costs. Fed data show Americans are placing greater on their credit scorecards and removing fewer mortgages, as they want to increasingly borrow to cover the better fee of everyday essentials and respond to growing interest fees. There have been a record 537 million credit card money owed inside the first zone, a soar of 31 million over the past 12 months, according to the Federal Reserve Bank of New York's quarterly record on family debt and credit score. Meantime, mortgage originations totaled $859 billion inside the first 3 months of 2022, the bottom in nearly 2 years. While mortgages are nevertheless with the aid of a ways the biggest thing of family debt at 71%, the information display how clients are relying greater on credit cards as decades-high inflation boosts the price of the entirety from food and gas to shelter. And now that the Fed is tightening policy and mortgage rates are the very best considering 2009, Americans are refinancing them tons less, in addition to automobile debt. The information reflect a stark assessment from 2021, when Americans capitalized on a number of the bottom hobby quotes ever to refinance debt at historical levels. Now that the Fed has hiked quotes by way of the maximum on account that 2000 and indicated it will hold doing so within the coming months, debt service costs are growing as well. Economists have warned that better interest payments could tip sure forms of debt, mainly scholar loans, into delinquency from traditionally low tiers. Interest bills are starting to tick up across almost all debt sorts, including credit score playing cards, mortgages, automobile loans, and home fairness lines of credit, according to the New York Fed. There was additionally a small increase in the quantity of foreclosure in the first sector. The survey showed clients hold a document $3.28 trillion in additional credit scorecard debt to be had. A separate file remaining weak confirmed U.S. consumer borrowing soared in March by the maximum on record as credit card balances ballooned and non-revolving credit score jumped, underscoring the mixed impact of solid spending and rising fees. That's a terrific register that spending is the largest contributor to the financial system, however can be worrisome if Americans can't hold up on bills. Those bills, in addition to others with variable interest prices, are increasing, and threaten to squeeze already strained households who stay paycheck to paycheck and whose wages aren't keeping up with inflation. Data out Wednesday is expected to expose customer costs rose 8.1% in April from a year ago. While that might mark a deceleration from the earlier month, it's still near the very best in 40 years. Mortgage originations boomed in the pandemic when rates have been low, however have been declining in current weeks as costs upward push. The 30-year loan fee as measured by using Freddie Mac OTC, FMCC, now stands at 5.27%, the very best since 2009. Unlike the 20,032,006 housing boom, mortgage debt has been growing a whole lot more slowly than home values, New York Fed researchers led by means of Andrew Hawout said in a separate weblog post. Hawout additionally mentioned that loans in recent times are going to borrowers with higher credit score ratings, reflecting persevering with high lending requirements coming out of the 2008 financial crisis. More than two-thirds of newly originated mortgage debt final region changed into for debtors with credit score scores over 760, at the same time as just 2% went to subprime borrowers. That compares to a median of 12% within the year's main as much as the Great Recession. Autos had been the third highest class of debt after mortgages and scholar loans, way to an increase in prices that's induced shoppers to borrow extra. That may also create a longer-term financial burden for households caught with big loan payments, whilst charges of used vehicles begin coming down from their peaks. As used car fees drop, new borrowers mainly are at danger in that they'll owe greater on their vehicles than the vehicles are well worth. Student loan debt in 2021 posted the smallest annual growth in almost decades, in line with the New York Fed, as far fewer Americans enrolled in college for the duration of the pandemic, and hobby payments have been reduced to 0% because of COVID-19 forbearance measures. The Biden management final month prolonged the pause on bills to August 31 from May 1. Americans owe a collective $1.8 trillion in student loan debt, in keeping with a separate decree by way of the Fed. Corrects second paragraph to reveal there were a file 537 million credit card bills within the first sector, rather than that many have been opened. Copyright 2022 LP.